Hey guys, just want to do a quick trade journal entry today. So I was looking at the chart of BHP. Now what I like about BHP is it's a massive company trading on the Australian market. It has a market capitalisation of $222 billion. So it's certainly not a little startup company. It's actually Australia's largest traded company on the market. Has a lot of liquidity. So there's no problem getting in and out of this market. So in other words, it's a share that I don't mind owning and holding on to for potentially weeks, months or years if I had to, because it's a good stock, pays dividends, and it's been around forever. So looking at the chart of BHP, I can see that if I look at a 1 year history or so, it's in a bit of an upward trend, although potentially sideways here. But what I'm more interested in is what's happening right at the moment. So if I draw potentially a trend line, I can see that it's pretty much in an upward movement, although possibly in a little bit of a channel here, and it's been trading this way since about 2020 or so. We can see it goes up, down, and so it goes. So my expectation is this stock really should come back up again. Whether it does or not, I don't know. Nobody knows. I mean, obviously we don't have a crystal ball, and if we did, we'd all be billionaires. So as a private trader, I can only make an assumption of where I think the market's going to go, or in this particular case, where the stock's going to go. Now, if I look in the shorter term, I can see that potentially there's been a little bit of support. That used to be resistance. It's met this price quite a number of times. And it's meeting it again today. If I look at the volume profile, I can see that this is where the majority of the shares get traded, around these prices here. Meaning not much is traded down here, not much is traded up here. It's generally traded around here. I can also see that there was a recent gap down here, and there have been many gaps in the past, and the gaps tend to get filled. Meaning if there's a gap down, it gets filled. Gap down gets filled. Gap up eventually gets filled. So my expectation is this missing gap here is probably going to want to get filled. Bottom line is, I think this stock potentially is going to go up. Therefore, would I like to own this stock? And the answer is yes. And would I like to own this stock at the current price of $44.04? And the answer to that is also yes, because my expectation or assumption is that the share price is going to continue up. So in order to buy BHP, there's a few ways I could do it. Obviously, I could just go to the market, click on the buy button, and say that I want to buy a couple of hundred shares at market. And it's going to cost me about close to $9,000. The other option is, rather than saying I'm going to buy at market, I can put in a limit price and say that I want to pay $44 or $42, whatever price I want to pay. And by mucking around and waiting for a seller to come down to my price could save me $300 or $400. But I'm not going to do either of those. What I've done instead is I've decided to write 2 put contracts. I'm going to say, okay, market, I'm happy to pay $44 or thereabouts for these shares, but you can give me $300 or $400 in the process. So what I do is I come over to my BHP, I go over to derivatives section, and I'm actually looking at the market closed right now because it's 11:44 p.m. This is a trade that I actually executed today, and now I'm just doing the journal entry for it. But I scrolled down and I'm thinking, okay, today's currently the 27th of February. I'm looking for options that expire in about a month. So I came down to the 14th of March. The 21st of March, because that's about a month away. And I saw some options that expire on the 21st of March with a strike price of $44.60, and I decided to sell 2 contracts. Now the good thing about these options is that they're European, not American. The difference with that is European options can only be exercised at expiry, not before. So American options can be exercised any time between now and expiry, whereas European options can only be exercised on the expiry date, which in this case is the 21st of March, which means that between now and the 21st of March, I don't have to worry about my options being exercised, which just gives me a little bit of time to work out which way the trade's going and whether I want to stay in the trade, buy my way out of it, or roll it up or roll it out or close the trade altogether. So I actually sold 2 of these contracts today at $1.76. You can see the last price at $1.76. That was me. That was my trade. If you look at course of sales today, I did a trade, 2 contracts at 3:19 p.m. this afternoon, and I collected $394 for it. Here's how that looked. When I looked at the market today, here's a screenshot of what I did. The 44.60 put option expiring 21st of March was trading between $1.64 and $2.04. I put in a sell order at $1.76 and I was taken up on it. Again, here's the market, here's BHP. I looked at the chart and I thought, yeah, I think that's going to bounce and go back up. Whether it does or not, I don't know, but I'll do another update of this same trade to let you know how it turned out. But the bottom line is I put in an offer to sell to open 2 BHP XT8 contracts at $1.76, even though they were trading at $1.62 and $2.02. My order was submitted. I received an email notification to tell me that my order has hit the market, that I want to sell 2 contracts at $1.76, and then I got an email confirmation not long after saying that my order went through. So I've been credited $359 after paying $35 in brokerage and GST. And I know, I know I'm going to get a lot of comments about, oh, you can get brokerage for $2 or $1 or whatever. I get it. I'm in Australia. I'm paying $35 for brokerage. I know it's expensive, but to be honest, in the scheme of things, I actually don't really care that much because I'm too lazy to set up a new account with another broker. And when I'm putting through a lot more volume, I'm certainly going to look at other brokerage options because, yeah, obviously if you've got to pay $35 per transaction, and if you're doing 100 or more transactions in a year, you know, it's another $3,500 that you could be putting toward your own funds, and it certainly eats into your profits. There's no doubt about it. So here's my open position. Now the thing with these contracts is they're actually for 112, not 100. Meaning that if I were exercised, I wouldn't be assigned 200 shares of BHP, I'd be assigned 224 because I got 2 contracts of 112 each. So when I look at the market now, I can see the last price was $1.76. That was my trade that went through this afternoon at 3:19. So essentially, I've been given close to $400 to essentially sit on the sidelines and say, hey, if the stock price drops down to, in this case, $44.60, I'm happy to buy it at that price, and you can give me $400 for the benefit. Now I get it. This is a put option that's already in the money by a few cents because the stock is currently trading at $44.04, not $44.60. So it's like 56 cents already in the money, but I've received $1.76 for it. So if we look at that, we can basically say I've just been given $1.76 times 112 because these option sizes are for 112 contracts, and I've sold 2 contracts. So that equals that times 2. So $394.24, less brokerage of course. And the strike price on this is $44.60. But the current market price of BHP is $44.04. So in the worst case scenario, well, not the worst case, but let's just say somebody said to me right now, and they can't because I've got European style options, not American, but let's say someone knocked on my door and said, hey buddy, I'm assigning you, you need to now shell out and buy 224 of these BHP shares. Well, that would cost me 224 times that, it would cost me $9,864.96. But I've already received $394.24 in credit. So in other words, my total cost isn't 9,864, it's 9,470. And if I divide that by the 224 shares, my shares would actually only cost me $42.28, even though they're currently trading for $44.04. So I would actually be in credit, because I could then turn around and sell those on the market and collect 9,864 for something that's cost me 9,470, which of course is a credit of $394.20. So if I was exercised right now, I get to keep $400. That's how much profit I would have made on this trade. Now, of course, if my assumption is correct that the market does continue to go up, am I going to get exercised? And the answer is no. Why would somebody want to take me up on an option to sell their shares, their BHP shares, to me for $44.60 if they can sell them on the open market for $48, $49, $50? So the likelihood of being exercised is slim if my assumptions are correct that this BHP share is going to go up in price. If it drops, yeah, then I'm going to get assigned. I'm going to get exercised, because somebody is going to say, hey, my BHP shares that I bought back here are now only trading at $42 or $41, but I have the right to sell them to somebody else for $44.60. I'm going to do it. So yeah, of course I will get exercised if the price falls. But bearing in mind, if the price does fall, I'm happy to own the shares because I've already been paid close to $400 for the privilege. So we'll keep an eye on this trade over the next few days and we'll see how it goes. At the moment, I've got about 23 days to expiry. And if they expire worthless, I get to keep the $400. If they expire in the money, then I'll be assigned the shares and I'll be exercised. But of course, I also have the choices in the upcoming days if I want to roll the options up or out, or close them out or whatever. So I'll keep you updated with how this trade pans out. If you subscribe and hit the bell notification, of course, you'll get notified of my upcoming videos, and I'll keep you in the loop with how this trade's panned out.